Welcome to my $100,000 stock experiment, Sell Rules, week number 29. I'm sharing my stock journey as I practice and develop my sell rules. This isn't an endorsement to purchase any stocks that I've bought, nor is it an endorsement to purchase stocks in general. My focus is on my sell rules. This needs daily attention, and it's not a buy and hold strategy. My basic premise is that my start date is in April of 2018. I have $100,000 to invest. My goal is to double my money in 1 year. My focus is on practicing and developing sell rules. And I'm trading in my rollover Roth IRA, so there's no tax implications there. And I do have a bunch of free trades, so I don't have any transaction costs. The market is in correction, and according to the IBD, this is not a time to be buying stocks, and I'm trying to stick by that. I did learn my lesson a couple weeks ago. It was in correction, and I did buy a couple of stocks. I thought it was going to come out of correction, but it did not. And so I'm holding off new purchases right now. I want my sell rules to be as simple as possible, and I've tightened them up a little this week to make them more concise. So I put a floor at 8% below my purchase price. If a stock falls below that, I need to be selling the stock. When I buy the stock, I put an alert at that 8%, so I'll get a text message if it falls below that. If a stock is moving sideways, not much up or down price action, and it's above that 8% floor, I'm happy to hold the stock for 4 to 6 weeks to give it a chance to take off. I want my stocks to be gaining a minimum of 0.5% a week. And after a stock has gained 10% or more, I change the floor from that 8% up to a violation of the 20-day exponential moving average. And the last rule is to watch stocks that I've sold to look for repurchase opportunities. I'm having a difficult time sticking to rule number 1, so I'm going to give myself a deadline of the end of next week to clear out any stocks in my portfolio that have fallen below that 8% floor. I sold 2 stocks this week, NOA and STAA. As you can see, one of them I was able to sell with that 8% loss rule, and one of the stocks I had a 16% loss, which I really need to take care of letting my losers get out of hand. Champions Oncology is the only stock that I have a profit in, and the price is hovering right around my purchase price. I had set a floor above that to not take a loss in this stock that I had a 50% profit in at one point. But I still haven't sold it, so I'm hoping that the stock consolidates and then takes off again. This is a chart for Cactus, WHD, and the dashed green line is showing the purchased price, and the little square box is showing the day that I purchased the stock, and the yellow line is showing the floor where my 8% loss rule is, or in some cases I may have moved the floor up, but in this case it's 8% below my purchase price, and you can see that the stock price is well below that. Veritex also dropped below the sell point and is back above it, and Boston Scientific is still above the sell line. Lululemon is the last stock in my portfolio, and it is above its 8% loss line. Hopefully it will start going back up. Here's my current holdings and my weekly change. So on both of these charts, I sort by the lowest value on the top. So WHD is my lowest holding dollar-wise, and my biggest holding dollar-wise is CSBR. And then the weekly change percentage over on the right-hand side, I sort with my biggest loser on the top, which for this week is WHD, and the one that had either the largest gain or the smallest loss, in this case, Lululemon for this week. But all of my stocks were losers this week. This is showing the current value of each stock that I own and the number of weeks that I've owned each stock. So you can see CSBR, the orange, I've owned that stock for 6 weeks, and right now it is up about $287, even though it had been up $4,989 in week 2. So I still have a gain in that stock, but it is down substantially from its high. The line across at 9,200, that's my 8% loss, so no stock should be sitting below that. So you can see the two stocks over on the right. I'm not doing a good job with my sell rules. Veritex and WHD are both below that 9,200 floor. I thought you might like to see the sector and industry breakdown of the stocks that I own. So most of my holdings are in medical right now, various industries there, and the retail and energy I'm also have holdings in. The benchmark is showing that I'm down approximately 3 grand from last week. My 29-week percentage gain is 26.9%. I'm up from my purchase point. And the S&P, you can see, is just about even for the year. Well, not for the year, since I started my experiment. I wanted to look at where is the best place to lock in gains without missing big winners. When I started my stock experiment, I wasn't using the violation of the 20-day exponential moving average. So I wanted to see if where I had sold compared to the violation of the 20-day exponential moving average was the right place to be selling, or if it was another indicator. At the Los Gatos IBD meetup this week, Franz was giving a presentation on moving averages, and the charts he was using were year charts, and I typically use a 3-month chart, but on the year charts, I was better able to see the trends than the 3-month chart, but for purposes here, I liked a 6-month chart, and I also added a 5-day simple moving average, the brown line in there, to see the trends. So I'm going to go through a few charts and see if how using different sell rules would have changed my results. So this is Weight Watchers, and the orange arrows are pointing to where I bought the stock and where I sold the stock. This stock had gone up a total of 29%, and I sold it for a 14% gain, but that means I missed out on 15%. So the green arrow is pointing to where the 5-day moving average crosses the 10-day moving average. And the blue arrow is where the 5-day crosses the 20-day exponential moving average. Right under the blue arrow, there's also a shaded box, and that is showing where the stock started closing below that 20-day exponential moving average. Those two arrows and the box all would have given me more of a gain than at my sell point. This is Funko. I bought it, I sold it, I bought it, I sold it. That second buy I should not have done. But on the first purchase, if I would have sold at the green arrow, the blue arrow, or the shaded box, I would have done better than where I sold it. And the same holds true for Omnicell. There were a couple of green arrow points where I could have sold, and a blue arrow and the shaded box. I wonder though, the shaded box down at the sort of in the middle of the screen, would I have gotten bounced out then, or would I have been holding it for my 4 to 6 weeks with my 8% loss line if I would have given that a chance to consolidate? I don't know, but hindsight says sure. But I just need to think about this and look at my sell rules and come up with one that works. In conclusion, I think that following either of the sell rules below, the 20-day EMA violation or the 5-day crossing below the 10-day or 20-day would have locked in higher gains for the scenarios I showed. I also want to make sure that I'm taking 5 to 10 minutes a day to review each chart, that it can be done in the morning, at night, at lunch, but I need to really be looking at each chart each day. And then I need to listen to what the charts are telling me and follow the rules. I'm also going to be working on my watch list this week, and I'm looking forward to the market moving to a confirmed uptrend and adding to stocks to my portfolio. Thanks for watching. Keep an eye out for my next episode, or better yet, subscribe to my channel. Don't forget to hit the bell if you want alerts when I post a new episode.